We're glad to have you with us. This is Business Incorporated on Channels Television. I am BC Adebayo. Coming up today, Brexit talks hit final 24 hours on Wednesday. The IMF recommends unified exchange rate system for Nigeria. And Chief Executive of the Africa CEO Forum, Amin Yamid, highlights the role of the private sector in actualizing the Africa Continental Free Trade Area Agreement. But let's begin with a look at the markets in Africa, where most major indices are mixed at intraday today. Here in Nigeria, the index lost 0.05% at about midday, while the GSE was up 0.08% at intraday. In Egypt, the index was up 0.92% at intraday, while Kenya closed negative on Tuesday. And in the Middle East, markets were mostly positive at intraday. In the UAE, the Abu Dhabi index plunged higher 0.1%, while Dubai's index also rose 0.06%. Saudi's index lost 0.94% at intraday, and Qatar's index gained 0.04%. The European stocks traded lower this morning as investors paused for guidance on the likelihood of an imminent Brexit deal between the UK and the EU. Orit Bats is standing by from the Frankfurt Stock Exchange for more details. Good to see you again today, Orit. Now, optimism seems to be fading over a US-China trade deal, and at the same time, hopes for Brexit with a deal before October 31 are flaring up. How are the markets in Europe reacting?
Well, at the moment, it's looking up, at least here in Germany, where the DAX is going up by about 0.3, 0.4%. Nothing really to write home about, but it does mean that it's building on its gain yesterday. And yesterday, the DAX reached a high for 2019. This on hopes that China would progress and Brexit would progress. So while there is a little bit more hope than skepticism, it's a very narrow margin there, but it's meaning that investors are holding on to the gains, and they're wary of being on the wrong side of a decision, either by going in too much or going out too much. Milan is also gaining, Paris and London looking not so good. Of course, also the view going to China, with the new threats there, with the differences over protests in Hong Kong being made evident. I think the investors there are getting a bit more on the wary side.
Now let's talk about banks. Major public banks in Germany today presented their forecast for the markets. Where do they see the share prices heading, and how is it possible at all in this environment to even attempt such forecasts?
Yeah, they see them as a rule tending upwards, as investors, institutional investors, asset managers have to have some alternative to the bad returns that they're getting on sovereign bonds. And so it looks good for equities, but it's indeed almost impossible to make a forecast. They don't say it in those words when you talk to them. I talked to a number of them today. There were 7 institutions represented at this presentation, but they do say into the microphone, if you will, it's very, very difficult to make a serious forecast with these geopolitical developments going one day this way and the next day that day. And you can also see it in some of the numbers that they forecast. There's a big spread between individual forecasts from individual institutions. For example, on the forecast for the growth 2020 of the U.S. economy, the range goes between 0.6% and 1.8%. Now, that's not a big spread in absolute numbers, but proportionally, there's a huge difference there.
Now, we're still talking about banks, Orit, and the Bank of America reported today after 4 big competitors went ahead yesterday. That's the BOA, Goldman, Citigroup, and JP Morgan. What trends are you taking away?
Well, Bank of America beat expectations, and most of the other ones did too. Goldman disappointed a bit, but you get one trend is that they're feeling low rates, they're feeling the slowing economy, but they're still earning tremendous amounts of money. And JP Morgan managed to increase its profit, for example, in the third quarter by 6% to $9.1 billion. And when you take that raw number, $9.1 billion, JP Morgan Chase alone, the #1 bank in the US, that's more profit than all the banks in Germany had in the whole year.
All right, Oris, thanks for these updates and do enjoy the rest of your day.
Thank you.
Now, it's the final day of Brexit talks between negotiating teams from the UK and EU, with hopes that a deal can be reached before a crucial EU summit. A deal needs to be reached today if it stands any chance of being approved by the EU and then by the UK Parliament at the weekend. Meanwhile, consumer prices rose at an annual rate of 1.7% in the UK in September, and that matches August rate that was the lowest since December 2016. Let's head over now to our London studios, where my colleague Juliana Olayinka is standing by to summarize these stories for us today. Juliana, how are you doing today?
I'm good, Bissy. Nice to see you.
Nice to see you too. Now let's begin our conversation with the latest UK inflation figures released today. What do the numbers say?
Well, UK inflation in the UK remains the same in September as it was in August. That's at 1.7%. So there is no change, but it does fall short of economists' expectations. They expected a rate of about 1.8%, and the Bank of England has set a target at 2%. This is the lowest rate of inflation since December 2016, and it has made some analysts a little bit anxious. Of course, we had last week's GDP figures that seem to kind of allay fears that we could be heading into an imminent recession. But considering that UK unemployment figures rose yesterday and this rate of inflation today at 1.7%, some people do feel that the UK economy is indeed struggling, and that maybe in the forthcoming months, potentially depending on what happens with Brexit, the Bank of England may cut those interest rates that they haven't for so long.
And talking about Brexit now, it's the final day of talks. What sound bites are you getting from the newswires?
Well, all we know, Bissy, is that negotiations are ongoing. This morning, Reuters reported that they seem to have reached a stumbling block. Of course, we know Ireland, that backstop is tremendously difficult. And although last week the Irish leader did say he did feel there was a pathway to a deal, he has said on camera today that he still feels that it's very, very difficult. Some people are expecting Boris Johnson to arrive in Brussels any time now. He does have a meeting with his own cabinet members. That was supposed to be later this afternoon. He's pushed that forward, and they're actually having talks now. Some are wondering, are concessions being made? It seems as if Brussels are not going to push back that much, and perhaps that's something that Boris Johnson will have to do. Earlier today, he had about a 90-minute chat with the leader of the DUP. That's the Northern Irish Party that are propping up his government. And, you know, if they agree with some of these concessions that Boris Johnson may or may not have done, then, you know, the House of Commons, when they meet historically on Saturday, they may back a deal. Also, as well, there seemed to be some progression towards Boris Johnson potentially asking for an extension. And that's because Steve Barclay, he's the Brexit minister. He has been speaking in London to members of the government's working committee, and he said that Boris Johnson will adhere to the law. This is the first time that any cabinet member has said that Boris Johnson will follow the Benn Act. And we know that the Benn Act runs out on Saturday evening. So the clock is ticking. It's ticking exceptionally loud, and it's all down to the wire.
And we're all waiting to hear the outcome of those talks. But how are these stories impacting the equities and currencies markets today?
Well, traders are still continuing to fret over whether or not a Brexit deal can or cannot be resolved. Literally, Bissy, I've said this before, but every single soundbite, every single meeting is having an effect, particularly on sterling, but of course on the equities market. Let's have a look at the numbers. At intraday, the FTSE All-Share is down 0.31%. The FTSE 100 also down 0.17%, and the FTSE 250 is down 0.88%. In currency, sterling literally plunged as soon as Leo Varadkar said that he didn't think, a deal was possible. So the British pound is down on the US dollar by 0.26%, also down on the euro by 0.19%, and down on the Japanese yen by 0.33%.
All right, Juliana, we'll see you again tomorrow, and probably you have more news for us on the Brexit talks. Now in Asia, most markets were mixed by the close of the day as news overnight boosted Brexit optimism. Japan's Nikkei 225 rose 1.20% to 22,472.92, while the Kospi in South Korea rose 0.71% to 2,082.83. Mainland Chinese stocks declined with the Shanghai Composite down 0.4%. In Hong Kong, the Hang Seng Index bucks the trend to rise 0.63%, and in Australia, the ASX 200 jumped 1.27%. The US stock index futures were slightly lower on Wednesday morning. Earlier on, the Dow futures dipped 64 points, indicating a negative open of more than 37 points. Futures on the S&P and Nasdaq were both marginally lower. Now, away from those numbers now, the International Monetary Fund is recommending a unified exchange rate system in Nigeria. A top official of the IMF at the World Economic Studies Division, Oyeselasan, explains that Nigeria's foreign exchange restrictions has distorted both private and public sector growth, as well as served as a major reason for the decline in investments. Take a listen.
Not high enough to lift the per capita growth into positive territory, as Gita said. So for some time now, we've been emphasizing the need for a comprehensive package to lift growth. One element of that will have to be stronger non-oil revenue mobilization. Nigeria has one of the lowest rates of revenue in the world, which was hit hard by the drop in oil prices. That is essential for the country to be able to spend more on priorities such as social safety and infrastructure. Other areas are the need for tight monetary policy and a simpler unified exchange rate system. Foreign exchange restrictions have also been distorting public and private sector decisions and holding back investment. More generally, as you mentioned, strengthening banking system resilience and continued stronger structural reforms especially in infrastructure, the power sector, and broader governance are critical.
We'll be talking about the role of the private sector in actualizing the AFCFTA when we return in a moment. Please stay with us.